What happened at FOMC today and why did Bitcoin dump so hard? Those are the questions we're going to be answering today and more. Everything you need to know about the FOMC event, the major comments from Yellen and Powell that caused the market to sell off. And we're also going to be looking at the next key levels to watch for in ES, which is a stock market, NASDAQ, and cryptocurrency across the board. Okay, let's get stuck into it. Okay, so what happened was BTC, we're in this ascending triangle, which obviously ended up failing to the downside. We did get a nice breakout of that, but you never want to see this happen, which is you get a breakout, it's struggling to go somewhere, and then you start to trade, open and close back inside the channel. Never a good sign. Sometimes it can bounce off here, but the momentum was just too strong to the downside today, and that was because we were getting dragged down very aggressively by the stock market. Okay, so this is what happened on ESA. This was the opening FOMC at 2 o'clock, which in my opinion was actually a bullish meeting. So I'm going to discuss the reasons behind why I think that was and give you some charts which show a little bit of evidence to that. And you guys can make up your own decision. I believe that it was actually a bullish outcome, and we probably would have launched if it wasn't for the fact that Janet Yellen was speaking in front of the Senate today, and basically she rolled back all the points that she made in a press conference to save the market from dumping when this was going on. And when we had the banking crisis first hit, they came out and said that they're going to back all the banks, and there's nothing to be worried about. And then in front of the Senate, that she basically came out and said, that's not really accurate, and it's not on the table that they're going to backstop all the banks. Okay, so that uncertainty, in my opinion, actually caused the market to sell off. Now we're going to look at that on a deeper level and just analyze it minute by minute. So what happened was, we had the FOMC meeting. Instantly, the algorithm started pushing the market up because they raised 25 basis points, and in my opinion, 25 or pause was going to be bullish, 25 a little bit more neutral though. And then basically from there, we started to pull back and have the standard FOMC chop, waiting for Powell to start speaking. And then, we started to push up through here, okay? And everybody started to digest the news. And basically the dot plot moved up slightly, which is bearish, but they've also pretty much hinted at that this is fairly likely going to be one of the last hike, if not the second last hike. They've got one more to do. The terminal rate, which is the top level that they expect rates to hit for this tightening cycle, this bear market, was actually brought down 25 basis points, which is probably a very bullish action. Okay, so you have to factor that in as well. But what happened here 45 minutes into the speech was Secretary of the Treasury, Janet Yellen, was speaking, and she came out with those comments that they're not really looking at stabilizing all banks. It's not on the table. And what happened was the market sold off very aggressively, almost instantly, came up, and we just had a support resistance flip through here. If you guys trade DR, hit the 50 and then rolled over, okay? And basically what happened, it had a really aggressive sell-off, and then we saw Bitcoin do similar type price action, but just get absolutely slaughtered for the rest of the session until the market closed. And then basically from the market close, we've just been chopping sideways and pulling back up. Okay, so why do I actually think that this was a bullish FOMC, even though we had a really aggressive sell-off, right? Let's go and have a quick look at the yields. So usually what happens is the yields and the risk assets will move in the opposite direction to each other, okay? But because they moved the terminal rate down, which is the highest level that they believe they're going to hike to in this cycle, that was moved down 25 basis points. The yields instantly sold off really aggressively, because what happens is the hedge funds, they have algorithms which instantly read the article and they start acting on the information in there. So they see that, it's been moved down 25 basis points, the terminal rate. And so they're like, okay, we need to start buying bonds. So what happened is instantly happens, the bond yield starts selling off, right? Which usually is bullish for the market. And that's why we did have that initial pump to the upside on ES, and this sold aggressively to the downside. We didn't have no fake outs and then moved to the upside. This has just been straight down. Same with the DXY, aggressive sell-off straight down, because, basically what they signaled today is they're getting very close to moving back to more of a loosening policy situation, right? They also said that what's happening in the banking sector at the moment will have an effect on the system, a credit crunch on the system almost, that is similar to a rate hike, okay? So it will have the same effects basically as a rate hike. So that means that they don't need to hike as much anymore because of what's going on in the banking sector, right? Which makes sense. You know, financial system is sort of collapsing. That's pretty bearish. That's going to tighten financial conditions in itself. Why do they need to stack on top of that to tighten even more, right? Doesn't make sense. So they signaled that, right, which in my opinion was bullish as well. And yeah, we had this aggressive sell-off in yields and DXY, okay? We can also see financial conditions starting to head back up, which is a requirement that I've been talking about for a little while to talk about inflation needing to come down. Okay, so let's go and have a look at FOMC. The dot plot here, Yahoo actually put out a really good, so this is the actual dot plot here, but I'm going to show you guys on the Yahoo one because they actually compare December and March on the same chart. Okay, so we can see that they put up the dots slightly. One member put it up to basically 5.75. We had 3 in between 5 and 5.75. And then the majority are still at 5.25, which is where we pretty much have the terminal rate now at the moment. So that makes a lot of sense. But there is a slight shift upwards in this dot plot, and they have said that no rate cuts in 2023. I don't really know if I believe that. The market, in my opinion, I don't know if they believe that either, because you know, they're all saying that the Fed funds rate is going to be targeting above 5%, but let's go and have a quick look here at where our current market rates are at. Okay, 3.8 on the 2, the 10-year 3.4, the 5-year 3.5. Okay, so I don't know if the market fully believes the Fed that there's not going to be any rate cuts later on, but obviously the Fed can't say they're going to start cutting rates, right? Because if they did, it would just launch all the markets, and that's not what they want. And I actually believe, you know, maybe a little bit of a tinfoil hat on here, that they specifically timed Yellen to come out and speak at the Senate at the same time as Powell delivering a fairly bullish and dovish FOMC to make sure that the market didn't completely launch off it, because we are in a sort of bullish area at the moment, which could still end up playing out bullishly anyway. I actually bought at the bottom of this drop because I was just like, this doesn't make sense. All the other factors outside of, you know, the main chart are sort of telling us that this was actually a bullish event, but the market sold off anyway. So for me, I sort of feel like this was an overreaction to the comments that Janet Yellen made during the Senate hearing. And actually, the funny part is later on in her Senate hearing, after the damage had all been done, she pretty much just went and walked back her earlier statement. It was like, oh yeah, no, but you know, we are considering it. It's just a little bit too early, right? So, you know, it's it is a little bit of a circus out here at the moment. And so maybe there's a little bit of a tag team effort going on between Powell and Yellen on how they're handling the situation to make sure that the stock market doesn't break out too early and start to lower financial conditions and make it harder for inflation to come down, okay? That might be a little bit too tinfoil, but you know, I don't believe in coincidences. They were both giving a speech at the same time, and his was bullish, which probably would have sent the market, you know, into a really strong uptrend, and hers was, you know, came out with some bearish statements, walking back comments, spooking the market, and then she walked it back later on, right? Anyway, let's keep moving forward. This is the table of the last all the CPI data events, right? So we can see here that the next one's going to come out on April 12, which isn't very far away, actually. It's like only not even 2 weeks, right? So it's about 3 weeks, right? 1, 2, yeah. Okay, so it's a little bit off still, the 12th of April. And we're going to get the data for March then. So we are going to be comparing against CPI that was 8.5, which is very high, right? So it used to be 8.5 and 2.6 that they would compare against. But basically in January, they made it that they're only going to be comparing against the previous year. So what we will start to see is CPI start to come down fairly aggressively, in my opinion, because if you look back over, you know, last year, we were getting, 9.1s against 5.4s and 0.6s, right? We were getting 8.2s against 5.4 and 1.4, right? And then it wasn't really until October where the market bottomed that I talked about this a fair bit, that we were starting to get over 6, right? Over 6.2. And this is actually, this reading here, the 6.2, that was actually when the market topped at the top in November at the very cycle top. And that's when they came out and said they're going to have to do QT, right? So that was a major inflection point in the market. And that was when we started finally comparing high CPI numbers to high CPI numbers. Now we're starting to see, lower CPI numbers through here. We're at 6 against very extreme 8.5, 8.3, 8.6, 9.1 over the next 4 months. Those are really high numbers, and you're not even taking the second year data into account anymore as well. So it's going to be a lot easier for them to, promote a message that they're starting to beat inflation, and inflation will look like it's coming down. Okay. So that's one thing to take note of, in my opinion, that we could see CPI probably going to come in under 6 in the April in the April data for March, and then when we have the March data coming out in April, that is probably going to come, maybe even low 5s, under 5, right? And if that happens, I think it increases the possibility that we're going to get the soft landing finally, right? And that's going to be really bullish for all markets, and really could send Bitcoin up to 48K, right? If we do get low CPI numbers over the next few meetings. And the very important thing to remember, guys, unemployment has to stay low, because if unemployment starts to go up while this is happening, that starts to show weakness in the underlying economy. Okay, they always promote, oh, the economy is so good, blah, blah, blah. That's because we're pretty much all-time low unemployment, right? Which means it's easy to get a job. Pretty much everybody's got a job, right? That creates its own issues as well, though, because it's harder for companies to hire people and it makes their life tough. But it also means that when conditions get good again for companies, it's a lot easier for employees to get raises, right? So then the consumer starts getting into a bit of a better position. Okay, so let's get back to the charts. And what's most important here is what price does in this falling wedge, okay? So if you're just looking at this on general price action, you would say that this was just a whole heap of trap traders for late longs, and now we're back inside the falling wedge, right? Now, if we reject off here, that's not a good sign. I'm going to be flipping a lot more bearish across all markets if that happens. And we'll probably see Bitcoin pull back more towards the 25K level and see if we can get a support resistance flip there, okay? What we don't want to see is ES starting to trade below this key level here at pretty much 3,891. And we don't want to see prices come back below this downtrend through here as well, right? Because that could lead to quite a large sell-off aggressively, and then maybe, potentially the capitulation to a double bottom, or down in this target zone we've been talking about for a capitulation event, right? Now, the bullish case, which I think is probably more likely, because I do think that this was an overreaction sell-off during, a vulnerable time in the market and high volume, high vulnerability. If we can get back into this downtrend, back outside of this downtrend again, could look quite good and potentially start to head back up to the falling wedge targets. But this also could lead to quite a large inverse head and shoulders through here as well, right? So the neckline through here, if we can break that level and get back above this swing high point through here, which is actually a swing high point from the CPI and FOMC event in December. And if we can reclaim that level, I think, the market's looking really bullish and really strong, and we'll probably start to push to the upside. Now, the danger was that this FOMC event was really bullish and it just launched straight up like this. We'd be looking at prices coming back here. Now it's going to give it a little bit more time and potentially help to ease inflation for a little bit longer, okay? Now, BTC, let's have a quick look at that. Oh, that's the low time frames starting to play out quite nice. We came back. So this was a really nice 4-hour. This was a really nice 4-hour order block. And if you use a TD sequential at all, this was also a 9. So which is basically a really important number in the sequence. And algorithms do like to interact with those, right? And bounce off those. So as long as we're above this 9, I think we're good because this is a strong order block. And potentially all we're doing is coming back down into the buy zone, support zone down here. And we're going to chop sideways like this, right? Maybe put in a falling wedge or something like that, or, you know, just a symmetrical triangle, and then break out to the upside, right? So that would be the bullish case here. And if, you know, we're as strong as what we were in, say, 2019, that's the type of price action that we're going to see, right? Now, if this is going to stay bearish, because there is some inter-range resistance through here that we're pushing into right now. If we can't get out of that and it ends up rolling over like this, I think the obvious area to be looking to get into longs is 25, okay? Right, so that would be the neckline of the previous range highs, right? And it would just make sense for me that this gets, you know, a really nice big throwback, maybe trades below here. Everyone that bought in through here, they're going to be panic selling. And then, you know, the smart money, strong hands can be buying up back here at the neckline for the next move higher. Okay. So I think that is the major play here. You're either buying 4-hour bull hammers, right? Candles that look like this with a big wick to the downside in through there, very similar to back here, right? So this trading range through here, we had a similar type of order block through here. And every time price came back into that order block, we saw a lot of buying, right? So similar sort of situation going on here. If we get price coming back into this order block and we're getting nice candles, not being able to close below it, I think those ones, in my opinion, I'm going to be buying those anyway, right? Not financial advice. You can do whatever you want. And we will see if we can just flag out sideways here and then finally get a crack to break through this daily resistance from the preliminary support back here, okay? If that can play out like that, I think we're good to make that push at least up to 32K. And then the next clear level of resistance is about 37.5, all right? Might take a little bit of time to get there. This could play out for a little bit, which actually could give altcoins time to shine. It's going to be really interesting to see here what happens with Ethereum, because I feel like there's a nice trade coming up here and a breakout of these highs, right? And if we can break out of these highs, then we're going to be pushing up to 2000, right? Which is the range high from earlier on in the year, okay? So that is the trade for me on Ethereum at the moment. The other main one to look at is Litecoin, right? We've got the head and shoulders back here and we're really pushing to the neckline right now. While Bitcoin was selling off, LTC actually was pushing up, which is very interesting to see. If I can quickly grab up the Litecoin Bitcoin chart. Here it is. Right, we can see that we came back to this major area of support, or basically supply and demand, right? Came back to an area of demand after a very big sell-off in the Bitcoin Litecoin chart and bounced quite aggressively. Right, so basically my theory on LTC is if it can reclaim this 90 level through here, right, then we're really on. Now, it might need one more throwback to finish off the ascending triangle, right? And it depends what BTC does. If BTC has to throw back to 25K, right, for the inverse head and shoulders neckline retest, then this is going to have another pullback most likely. If not, and we just, you know, chop sideways for a little bit, LTC might be able to just break out by itself, reclaim this 90 level, and then I think it really could be off to finally have its breakout of $100. So that is the main one I'm watching for at the moment for altcoin plays. It's really important, guys. A really good tip is to watch the altcoin market when Bitcoin is nuking to see what actually outperforms Bitcoin while it's going down. And Litecoin actually moved up 6% against BTC while it dumped off, okay? So that's pretty much it, guys. Hopefully you learned a little bit about FOMC, how everything plays out. And we'll have to wait and see what happens here, you know, with this inverse head and shoulders potential setup on ES. Can we break out of this key level and drag all markets higher? Right, that would definitely make it easier for BTC, but I also wouldn't mind buying a deeper pullback. Where's our main chart going? I wouldn't mind buying a deeper pullback on BTC at 25K. I think this is where the smart money is waiting to get their next buy-in, but they might not get it as well, because sometimes the whales, once they turn this BTC pump on, sometimes they just don't let you in, and you know, they keep it very high for a very long time. Okay. And because that's the max pain. Everybody that didn't get buy-in here or here because it moved too fast and they only got a small position in here, they're waiting back here to get in. And sometimes the whales, they just don't give you that second chance to get in. Okay, guys, thanks a lot for tuning in. We'll see you all in the next episode.